Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel, and a great video for all you real estate investors out there that maybe have been a little disappointed in the returns over the last year. Real estate stocks fell 5% last year, and some property sectors got slammed, falling as much as 20 and 30%, all while the S&P 500 boomed to a record high. Nation, you know I'm a big believer in real estate. It's where I got my professional start as a commercial analyst. I've managed my own rentals, and there is truly no other asset class that's created as much long-term wealth. But real estate stocks are lagging again this year, and it might get worse before it gets better. So in this video, I'm going to highlight why you should still be investing in real estate and where to look. We'll look at why property has underperformed stocks and then the outlook for this year. Then I'll show you some alternatives to real estate stocks that give you that property exposure and the cash flow, but without the volatility. So let's get started. But you know I gotta send a shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now you clicked on the video, so you probably already know why you need real estate in your portfolio. I know stocks are the sexy, high return investments, but adding property exposure can help keep those returns and lower your risk, even when the market tumbles. And that's because real estate prices and those cash flows follow a different set of economic factors than the stock market. Tenant leases on commercial properties are locked in for years, which means even in a recession, occupancy doesn't crash and you're still collecting that stable rent. Real estate is a great cash flow investment with the average dividend yield on REITs at 3.9%. That's more than twice the 1.6% yield on the stock market. And later, I'm going to show you a real estate investment with a yield 2 times the real estate average. Adding in some real estate stocks or property exposure also gives you a hedge when inflation heats up or when stocks look expensive. But now the most popular real estate stocks just got slammed last year, with shares of mall owner Simon Property Group still 20% under its 2019 peak, and office REIT Vornado barely moving from its pandemic low. And here we can look at the returns by property sector, according to the National Association of REITs, with less than half of the 12 subsectors posting positive returns. Retail property, office space, and lodging all got slammed with losses of 20% or more. Even residential property, which is supposed to be safer and less economically sensitive, posted a loss of more than 10% on the year. Now, of course, most of those property types were hit by the lockdowns, and people stopped going to the mall or taking vacations, and office space just went vacant. But real estate stocks, they're also underperforming so far this year, with the S&P Real Estate Group lagging the market by nearly 4% since the beginning of the year. And because real estate is so sensitive to interest rates, as rates increase, something that looks like it's going to be happening all year long, that could weigh on the returns for some of these stocks and property types. Now, I still do like some of the property types though, especially those healthcare REITs, which will benefit from the return of elective procedures, and the industrial REITs that are seeing massive demand through that e-commerce boom. But I also like the non-REIT funds as an alternative for a couple of reasons. Now, these are those non-publicly traded real estate funds that collect cash flow on their commercial property and then return that to investors on a quarterly basis. And because management can maintain that long-term focus rather than trying to appease the stock market, volatility in these is generally much lower than those REITs. The Vanguard REIT ETF, that's ticker VNQ, fell 25% in the pandemic sell-off, almost as much as the overall market, and prices have been just as volatile this year. By comparison, the Streetwise First Street Office Fund saw its net asset value drop less than 2% in the pandemic and was back up to that record high by September. Non-public real estate funds also tend to cash flow better than the REITs. And they've got smaller organizational structures, which means lower costs and can pass more of those rents onto investors. For example, while the Streetwise Fund did have to cut its dividend marginally to preserve that cash flow, it's still paying an 8.4% yield, twice the average for REIT stocks. I invest on quite a few of these real estate platforms to get the different property and investment types. I can invest in real estate debt on Pure Street and Ground Floor, and in farmland on Farm Together. For equity and cash flow though, I really like that Streetwise platform and its office fund. The Streetwise Fund owns just under 440,000 square feet in 4 properties with occupancy at 96% and just 51% loan-to-value leverage, which means more cash flow and less risk. The fund targets secondary, non-gateway markets for lower prices and higher dividends, with strong tenants and just 2% of leases expiring this year. That means good cash flow reliability for years to come. Now, the platform is open to all investors, not just accredited investors like a few of these other funds. The minimum and fees are some of the lowest in the industry, though it does take between 3 to 4 weeks to apply, fund your account, and invest, so you want to start early. I'll leave a link to the site in the video description below, so check that out. With the new app, you can access your account, add funds, and follow your investments right from your phone. Every investor needs real estate as a part of their portfolio, but you need to know the different ways to invest and follow the outlook on that year-to-year basis. That way, as some property investments lag and some outperform, you're going to be ready to take advantage of the opportunities. Check out the Streetwise portfolio with the link in the description below, or click on the video to the right for my 5 favorite REIT stocks to buy. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.